Hello and welcome back to another Stonksy video. Today we're going to be looking at how you can take advantage of high volatility in the market, how you can be prepared to enter trades when that volatility spikes and we get Bitcoin and altcoins trade into key levels. First things first, if you do want to smash a like on the video for me, and if you happen to be new, do drop a subscribe as well. It'd be great to welcome you to the Stonksy channel. So today we're going to be looking at how you can prepare yourself and adopt implementation to take advantage of the market when we get high volatility, such as this sell-off that we've saw recently on Bitcoin, and then obviously the pump up and then the shift back down that we saw. So yeah, this is a very volatile time for Bitcoin following what we had with low volatility and tight compression of the price. Now, first things first, when you do get a period like this of several weeks of the price trading very compact and trading in a small trading range like this, you can expect there to be a big spike in volatility to come at some point. Obviously, we don't know when, but all you can do is prepare and be ready for it when it comes, such as obviously when price started to break out of this range, and then obviously we got a sharp sell-off. But then the most amount of volatility kicked in when we lost the entire previous trading range and the price sold off sub $80,000. So we're going to look at a few tips and tricks that you can prepare yourself to take advantage of the next volatility spike, whether that be to the upside or the downside. I'm going to be giving you that information for you to take over to your trading system. All I ask is that you firstly make sure you click that first link in the description, sign up to BloFin. It is the best overall exchange, and it also happens to be non-KYC as well, so you don't need to give them your ID. You just have to sign up with an email and it takes under a minute. Make sure you do that, and then yeah, please do drop a like and subscribe on the video. So what we're going to be looking at, well, the first things first is you should have all your key levels mapped out. Now, you can do this in a few ways. You can either do it yourself, or obviously with Stonksy, it automatically plots support and resistance lines for you on whatever time frame that you're viewing. So obviously at the moment we're on the 4 hour. As you can see here, it's got several lines plotted. So red, i.e. being resistance, green being support, and the thicker ones and the thinner ones mean different things as well. And you can also turn these on and off. You know, maybe you just want the thicker ones, which are major resistance and support, and then the thinner ones, as you can see, there's two different variations of them. One is historical and one is most recent price action as well. So you can customize these and have them on if you want. But if you happen to be someone, maybe you struggle with plotting SR, Stonksy does it exactly for you as well. And that link is in the description, the second one, for you to sign up to Stonksy. You get access to the indicator, Discord, and you now get access to the trading bot, which we've recently rolled out as well. And the indicator itself is made up of various components, such as the automated SR lines. You get background color change to show long and short opportunities in the market, and a few other bits as well. And we're constantly developing and working on the product to make it better and better and increased value for users at zero cost as well. The plans always remain the same price. So that is one way. And then obviously you can have a few, as you can see here, I've got a few of my own lines inputted in here as well, which I think are relevant. Now this one up here where I've got this zone mapped out, Stonksy has done it as well here and got the major resistance here as well. So you could just roll with that, or if you want to add your own as well, that's perfectly fine too. And as you can see here, I've got one here for where the range is. Again, Stonksy's got it down here. So how do you take advantage of this? Well, when price comes into a key level, you then wait for the reaction to see if momentum's going to continue or if it subsides and then the price begins to reverse. So a key marker of this is when Bitcoin traded into here. As you can see, it came into contact with the level that I've got marked out as, but it also came into contact with two levels that Stonksy has got marked out on as well. And it halted right at this one and then sold off. And as you can see here, when it got back below, it came up, rejected off this one, came up again, rejected, and then sold off, and then lost the key range low again too. So that is the first one for you, is to have everything ready on the chart to go. You don't want to be trying to chase around when the price is already making moves into key levels. You want to have everything on there for you. And like I said, you know, you can either use the Stonksy SR if you've got Stonksy, you can use your own, or you can use both. I think the mixture of both is the perfect ingredient to make sure that you get the precision when it comes into trading Bitcoin into key levels. The second one is going to be CME Gaps. Now, we haven't had too much involvement with CME Gaps over the past couple of months, mainly because Bitcoin has been trading in a range and the CME Gaps have been small like this one, as you can see here. The CME gap opened down here and then it quickly covered it, but the gap wasn't big. If we scroll out and have a look at this one, so Bitcoin had this CME gap down here at $77,000, just above, right there. And obviously it opened up here and created this big gap, which has been open, well, it was open for a while and left, obviously, a sizable gap. Now, on the downtrend that we got here, Bitcoin came down and closed most of it, as you can see. From here downwards, it closed all the way down to this level. Now, there's still some of that gap open, but it did close 2/3 of it and then has obviously reversed. That is one potential marker for you to take as well, is when we get volatility into a CME gap, be prepared for price potentially reverse and people chasing the move to be caught off guard and caught on the wrong side of the move. So, you could have been bidding potentially, the latter half of this CME gap, which then obviously would have worked out to be the correct entry. Then we got obviously the one that was created by Trump with his tweet on Sunday. And this gap, again, was major. But the price wasn't really too far away at the time that it opened. And again, price came into a key level like we looked at on this chart and rejected. So then that tells you, okay, maybe it's going to fill some or all of the CME gap. Price then came down, filled the CME gap completely. So this was the gap. And then rounded off. Now, when price started to round off and show strength, that buying pressure was coming in. That is potentially another signal for you to go, okay, it's closed the CME gap. Now, we might see a reverse if selling subsides, which it did, it subsided. As you can see, the movement stopped, rounded off a little bit, and then began to push up. So that is potentially another trigger for you to look at. Volatile move into a CME gap, close, selling subsides, okay, maybe we're going to reverse here. And again, it's all about being prepared, having your CME gaps marked on, or at least taking note of them, maybe have an alert set. Obviously, you could take advantage of a price alert there. But that's another method for you to take advantage of, is specifically at the moment when we're getting high volatility, is looking out for maybe these gaps that are being created and take that into the future as well. Now, obviously, I mentioned Stonksy's SR so far. Also, if we take a look at the background color change, as you can see, this is the 10-minute chart. Now, on this move up, the background went green around just under $88,000. Obviously, caught all the move up towards just under $95,000 where the price was capped. Then came down. The green background then closed out. It then entered a red around $92,000 and caught all the move down, and then is currently catching the reversal as well as Bitcoin is moving up at the time of recording. So this is another tool for you to implement, is Stonksy. If you haven't looked into it, obviously there's various videos on this channel. I go live every single day covering the market and looking at Stonksy. Do make sure you check it out. It's the second link in the description if you need that added help or that added eye in the market. Obviously, the community is fantastic in there all day discussing the markets, looking at trades. And you get trades like this given to you for potential momentum shifts in the market as you can take advantage of them. Bitcoin was also caught on the 1 hour by Stonksy absolutely perfectly during the sell-off that we got, the major one up there. But yeah, overall, the product is absolutely fantastic and you get access to the trading bot now as well. So this is just an example of another factor that you can input into your strategy, is using Stonksy, utilising its various features. And as you can see here, here's another one that we've not talked about yet, is the bullish and bearish arrows. As you can see here, we got a bearish arrow confirmation down here, price sold off. We got a bullish arrow confirmation here, price moved up, alongside being in the background color change. That's kind of like a double confirmation there, and the move happened perfectly after that. So it'd be great to see you over at Stonksy and see you in the Discord. Another tactic for you to implement is always have your key high time frame levels marked out for in the event that we get a very fast move into a key level. As we've discussed obviously here about having key levels marked out, obviously this is a lower time frame because this is recent price history. But if you have a look on this chart, for instance, I've got key levels marked out all the way back down towards $18,000. Now, why is this beneficial? Because when you get moves like this, there's high emotion in the market, there's high panic if the price is going to the downside. Obviously, you may be seeing people panicking, you may see wild thoughts and theories going all over CT, and it can consume you and it can blur your vision and potentially distract you from what might be a great opportunity. So as you can see here, I've got the previous range high marked out on. I've got the key level to the downside below that, and then obviously key level down, 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 just level to level play. Now this can obviously be very beneficial for during them times. For instance, if the price did cascade down to here, there would have been even more panic, even more fear in the market and all over CT if you was looking on there. And it could have blurred your vision potentially for a prime SR test, which could have provided a great opportunity. Having these key levels marked out keeps your trading clear and keeps your thought process as it should, because you're not going to get overconsumed then by what people are throwing out there, and all you're focusing on the chart, because no matter what's going on, external factors, you should always focus on the chart and what the chart is telling you. So this is a good tactic as well for having high time frame levels marked out at if and when price trades into there. You're not overconsumed by the move that's just happened and more focused on what the reaction may be and then move that may follow on from there as well. Because particularly we get volatility into high time frame key levels. Another tactic for you to implement is always have your key high time frame levels marked out for in the event that we get a very fast move into a key level. As we've discussed obviously here about having key levels marked out, obviously this is a lower time frame because this is recent price history. But if you have a look on this chart, for instance, I've got key levels marked out all the way back down towards $18,000. Now, why is this beneficial? Because when you get moves like this, there's high emotion in the market, there's high panic if the price is going to the downside. Obviously, you may be seeing people panicking, you may see wild thoughts and theories going all over CT, and it can consume you and it can blur your vision and potentially distract you from what might be a great opportunity. So as you can see here, I've got the previous range high marked out on. I've got the key level to the downside below that, and then obviously key level down, 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 just level to level play. Now this can obviously be very beneficial for during them times. For instance, if the price did cascade down to here, there would have been even more panic, even more fear in the market and all over CT if you was looking on there. And it could have blurred your vision potentially for a prime SR test, which could have provided a great opportunity. Having these key levels marked out keeps your trading clear and keeps your thought process as it should, because you're not going to get overconsumed then by what people are throwing out there, and all you're focusing on the chart, because no matter what's going on, external factors, you should always focus on the chart and what the chart is telling you. So this is a good tactic as well for having high time frame levels marked out at if and when price trades into there. You're not overconsumed by the move that's just happened and more focused on what the reaction may be and then move that may follow on from there as well. Because particularly we get volatility into high time frame key levels. Now when price trades into a key level that you've been looking at, you need to be ready to make that an actionable trade and actually put that on and then put your theory to the test and see if it comes off. Now, why choose BloFin? Well, various reasons. As you can see here, you can find all these on our website under the exchange heading. But just to list a few, it's non-KYC. You can use it anywhere in the world with a VPN. All assets are custodied in Fireblocks. They have no internal or sister company market makers, so they don't trade against the users. Yeah, absolutely fantastic exchange all around. And not just for the fact it's non-KYC, the user interface and the user experience is absolutely top dollar. The customer service is great. And just looking at the exchange as well, and this transfers over to the app, very clean and very easy, and everything's exactly where it should be. It's not complicated at all. So you can trade your spot on here, obviously buying, selling spot, your futures trading, or if you just want some, a trusted and safe exchange for you to store stable coins to potentially take advantage of when price comes into a key level. Whether that be spot or futures trading, you need somewhere to buy assets, don't you? It's the exchange to suit all of that. But yeah, as you can see here, we've got Bitcoin loaded up, and this is where you'd come over, you'd choose isolated or cross, you'd choose your leverage, you'd then obviously choose how much of the margin in your account you want to use in that trade. And then if you want to, you can implement your take profit and stop loss. It's got this one to quickly do it. Or if you go to the advanced one, you can go in there and you can have the advanced option as well. Or you can opt to do that afterwards too. And then it's as easy as that. You're long or short, and then it will appear here. Now, there is a full video on how to manage an open position on Bitcoin. And obviously, you know, add things like a trailing stop, change your stop loss and take profit while a trade is open. And you'll find that video in the description or at the end of this video. So do make sure you check that out as well. But yeah, the best overall exchange. And like I said before, you only sign up with an email. There's non-KYC, so you don't need to give them any form of ID, and it takes under a minute to sign up. So do make sure you click that first link in the description and sign up to BloFin. With our link at Stonksy, you get some really nice welcome benefits as well and bonuses. So yeah, do check it out after this video. And it would be great to see you over at Stonksy as well. Obviously, everything I've shown you in this video was free, so least of all, please do drop me a like. But it'd be great to see you sign up to Stonksy as well and see you in the Discord. You can find the second link in the description. And under the Start Now button, these are the plans that we offer. These buttons will take you to a fiat payment portal. We do also have crypto, as you can click here, but if there isn't the asset or network on this bit here, when it takes you to the crypto payment portal, if you just click the hyperlinked email address button and say, hi, I want to purchase this plan and I want to pay with this asset on this network, we can sort that out for you. You're not limited to what's on offer here as well. So yeah, that's Stonksy. And like I said before, we're continuing to develop Stonksy. The work doesn't stop. We've already rolled out several key updates. Obviously, released a trading bot recently as well. That is on BloFin too. So all users get access to the trading bot on BloFin. And yeah, we're already working on the next update, as we do after each one. We release one update and then it's straight to work on the next one, making the product better, adding more features and just providing more value to users at zero cost to them. The price always stays the same. So that's everything for this video. Hopefully you've learned some things that you can take advantage of and implement into your trading to take advantage of the next spike in volatility that we get. And that's all for now. So I'll see you on the next one, and do make sure you drop me a like and a subscription. Thank you.